Hello, welcome to another video by Indicator Vaults. In this video, we're going to take a look at the Easy Wolfe Waves indicator for the NinjaTrader platform. So here are the settings for the indicator, and the uh, the Wolfe Waves are they're a type of price action pattern that is great for determining market bias. That's the direction in which the market is trading. This indicator, however, is not necessarily great for generating trade entries. Although it can be used for that, there are other indicators that are better suited for this, such as the order block gen or the supply demand pro indicators. The Wolfe Waves indicator is primarily designed to determine market direction and whether or not you should be looking for buy or sell opportunities. In this example, we have the bullish patterns represented in blue. That's these two right here. So we should be looking for buy opportunities here. One of the great things about Wolfe Waves is these two lines here. They're represented here in the settings as the target line and the breakout line. So if I uncheck the target line, I hit apply here, you can see that green line that disappeared there. And if I uncheck the breakout line, that's the purple line, the angle you saw there. So I'm going to bring both of those back, and there they are there. Okay, so if we look at those lines here, okay, and we start with the breakout line, this one here. Okay, so first let me draw a line there and extend that from the point of origin here, and we're going to go here, and we could see, okay, that right here where where you had the waves here, the Wolfe waves here, it reversed here, and you could see when it came back and just touched the line here, that's the entry point. You could see the little symbol there that represents the entry point here. Okay, and then you had a little retrace here after the breakout. Okay, because that's kind of to be expected when you have a breakout. And then it shot up. So this worked out. And if we extend the line over here to this angle here, this gives us the you see where price it went to the line, but didn't quite close above. Just wicked above it, but didn't close, and then reversed and came right back down. So that would be the profit target. So in this bullish example, using these two patterns here, these are two separate patterns, but in these two patterns here with the angles here, these two lines serve to validate the pattern, and this here is a line that signifies the entry or the breakout of the pattern here. Okay, and this line here, when we extend it out, this is where the profit target is. So here we have a bearish Wolfe wave pattern, and it's represented here in red. And we have this on a 15-minute Euro US dollar pair chart. And here this here is the mirror image of the bullish pattern that we saw prior to this. And so if we were to take, if we look at the lines, the angles here, you see the one there. I'm gonna take a line, and we're gonna use a line here, and we'll start it from the point where the pattern originates, and we'll go out to about here. You can see there. I'm gonna follow that and extend it out. And right here is where the price goes above the line here, and that's where the breakdown originates. You can see there with the little symbol there. Okay, so and that's where it starts, comes back up here, and then we have the strong move to the downside. And if I would if I were to bring this down to the follow the green line there, okay, and extend out, then this would be the profit target point that's generated from the pattern here on this angle. Okay, now this profit target point, it's not the only point that we could use from the pattern. We could also, if we were to draw another line, so this time I'm gonna use a ray from here over this way, and we're gonna make that horizontal. Okay, so that would be another profit target point. It would be tighter than this one, but this is something that we could use if this was the exit on this was a scale out exit. So this would be the first point where we take some profit, and this would be the next point. We could also do the same thing with with this point here, the lowest point of this part of the pattern here, and we go horizontal here, and there's 3 points there that we could use as a means to exit trades for this strategy. Now, for a stop loss, of course, that would be somewhere above the highest point of the pattern, which is here, and it would need to be up in here somewhere, either conditional or fixed, so that it is compatible with the risk profile of the strategy that's being traded. Now, something we can do here, and we can I've taken the same exact pattern with the lines, and I've overlaid a modified Fibonacci scale here, and so here there's an interesting observation here is that the price points generated by the pattern that we see in the light blue lines here, if we look at the first one, of course, is going to be exactly the same because that's where the pattern originates. So the pattern is based on the last leg, or I should say the Fibonacci scale is based on the last leg of the pattern from here to here, okay? And so the first point is exactly the same. The second point being from this low here is very close to the 127 line here, okay? And then the third point here that originates from the angle line here is very close to the 161 line here, okay? And then we have the other 2 points at the 200% and the 300% points here. And these you could see. So if we were to have an entry here, okay, and then we start scaling out at these sensitive price points, this would work out really well, because you could see the Fibonacci scale provides some very good points, and you could see here the closing here is very close to that last level there, and so this would turn out to be a really good trade. Now the entries, this here just, it's better, like we at the beginning of the video where we started by saying that this is primarily used for determining direction. So you may want to use this in conjunction with other indicators to give you a more refined entry. So here we have another example of a bullish wave pattern, and we have this one on a 10-minute chart for the Australian US dollar pair, and we could see here the pattern forms here, and so we'll do the same thing. We're gonna take a line, and we're gonna go from the point where it originates, and you could follow the purple line there, okay, and we could see here, okay. So if we extend it out to here, this is where the pattern, after it forms, you get the breakout, and there's the little symbol that signifies that, and we get a strong movement almost immediately to the upside there, okay? So then we can do the same thing for the exits. First we'll do the angle there, okay? So we take this time we'll take well, we can use the same line here, and we'll just move it up here, pivot it up here, and that'll be one exit point. Okay, we can also use the highest point here. Okay, so we'll take a line. This is where we'll get the ray, and we'll go from here, and we'll go horizontal there. That's about right. Let's go about right there. Okay, and so that'll be another an exit point, and then we can use the high point here. Okay, so that'll be another ray here, and we go from here, and we go up horizontal there. Okay, so we would use this as an entry point, but in conjunction with another indicator to give us a good entry point. But that entry point doesn't get much better than that. That's unless you time it down here at the bottom where it's perfect. But that's a pretty good entry point just with the wave itself. Okay, and then the exit points here, we have one there, a second one there, and a third one there, and it captures most of the move. Okay, and for the third one, what you'd probably do is just put a trailing stop on whatever you have left in your position and let it run until it stops you out. Now, and you can see here, when we run this out, that the move, you catch most of the move here, and then price just completely makes a strong move to the downside. So this is a good example of the wave capturing a good move here. So here we have one more example of a bullish Wolfe Wave pattern, and you can see here it's formed with the angles here, and we'll do the same thing. We'll set up a line to go past those angles, and you can see this one here, the breakout started immediately after the pattern, within the next bar here. Okay, and you could see the move started, the breakout, the move to the upside started very quickly after that. And so if we set up, if we take the other angle and come out, we can see here that goes out right to that point right there. Okay, and you can see it captured all of this here almost perfectly. Okay, now if we zoom out a bit, okay, and we come out, we could see here that this just keeps right on going. So if we extend that line all the way out to here, and it continues to capture all the way to this point here. Now we do have a pretty strong move here, okay, but if we put the lines at the points on the same points, let's go with rays, the same points that we put them on the pattern. Okay, we have horizontal there, okay, and we have a horizontal line here. Okay, horizontal right there, from there. Okay, so this works out very nice. Okay, so again, you would use you would very likely have another type of indicator giving you an entry here also. Maybe just a basic moving average might do that here, but it probably wouldn't be till a few bars into the move. Okay, whereas the Wolfe Wave, what it does is it gives you a bias. So once you get the signal here, you start looking for entries to the long side. You capture this move here, so the first point of exit would be here. You take some profit. Okay, then you could come here, you would take some profit. Trade sideways for a little bit, and it comes up again, you take some profit. And then you get a strong move. So if you're still holding a position at this point, okay, then you probably get stopped out because it comes back quite a bit. But you could see here, let's go even further and see how far it goes. Okay, and so it gives you a good bias. So if you use this to look for other long, so let's say you have another indicator that gave you an entry here. Well, that indicator may also give you an entry here. Okay, maybe a pivot to the upside, maybe a moving average that changes direction, the slope of the moving average changes, that might give you an entry, and you still have this bias to the upside. So that's the Easy Wolfe Waves indicator. I hope this video helps, and until next time, happy trading.